All right, ladies and gentlemen, welcome back to the evening watch list with yours truly, Dex the Algo Capitalist. Hope you had a great day and a great holiday weekend. Our first chart that we're looking at now is theta. So, as you can see here, the market is consolidated under the bearish trend momentum reading. Therefore, we are expecting the price action to continue to head lower. Next, we have Zcash or ZEC. And on today's close, we got a crash alert for tonight into tomorrow's trading. It looks like the upsurge that we saw here, the rally is over, and the market is now preparing to head back down as the trend, which is a bear market, has now officially reclaimed the price action. We expect to see confirmation of this between tonight and tomorrow's trading. Next, we have XRP Ripple. Still has a bearish trend momentum reading, and it has crossed over to a bear market territory officially. And right now, with the bearish trend momentum reading, it has been neutralized for the time being because of the bullish algo shift. And the bullish algo shift is keeping the price action kind of propped up, but we're right here at this resistance point. So I'm anticipating over the next few days that as the market starts to bump up against this resistance, the bullish algo shift will drop off and the sell the rally mode will kick back in and prices will start to head lower yet again. Next, we have the silver market. So if you look here at silver, had a nice, powerful breakout here, nice rally, right? Locked in bull market. Then the market topped out, put in a short-term top. And we had the crash alert. We got downside production and confirmation of the short-term top. Didn't last too long. Market decided it wanted to break out and rally, which it did, and then continuation today. So as the market broke the $32 handle today, we now are still just shy of the 52-week high, and I do believe that now that we have this bearish trend momentum reading, we can expect price action to head back down. But the market has paused here briefly with the bullish algo shift. So that's keeping the price level elevated for the time being, which nullifies the bearish trend momentum reading. So instead of the price action heading lower, we have now put in a short-term bottom or support. Now, how well this support does will depend on if the bulls can continue to move against the trend momentum reading. And that is a very real possibility. So we'll see how far and wide this rally can go. The last rally was pretty significant. The one before that was pretty significant. And the one before that was pretty significant. This one here, not so much. This one here, not really so much. This one here was better. This one here was better. So we'll see. We will definitely see. But you're still in a bull market configuration, and you're just in a pullback mode for right now. Not a full-blown correction mode yet. All right, not a correction mode yet. Just a pullback. That's where you are for right now. So we'll see what happens as that goes, because now that you're out of this phase of it and you got the bullish trend momentum reading, the argument is that the long-term trend, which is the bull market, is attempting to reclaim the price action. So that's kind of where you are setting right now with silver, but it still looks strong. Next, you have the Dow futures. So the Dow futures did head lower, did give more downside production, 39,000, the key psychological support, and the Kumo cloud support. So we're going to continue to see the market push lower with this bearish trend momentum reading. You don't have any bullish algo shift to counteract the sell the rally mode. So we do anticipate the correction to deepen. All right, so you have support here at the bottom of the Kumo cloud. You do have that at 38,760. Then you have psychological support at 38,000. And then you have your old support here at 37,830. And then here at 37,410. So you have 1, 2, 3, 4 areas of support, 4 key support zones, I might add. These are 4 key support, technical support areas. If breached, you go into free fall and you have no more support until you get way down here at 31,600. And if that doesn't hold, you have no more support until you come all the way down here to 28,580. All right. You don't want to see that. So you still have a ways to go. You have some supports, key supports along the way, but the widest gap being the support here to here. That's a pretty wide chasm. All right. That's the Grand Canyon. And you don't want to see that happen if you are a bull in the stock market. Next is the NASDAQ 100. A little bit different. You're in a locked-in bull market right now, and you have bullish trend momentum reading, and the market is running. So it is locked in. This market is locked all the way in. All right, not stopping, not at all. And you even had, positive bot checks along the way, and the market is still bullish. It's still locked in, and it's not really giving you any pullbacks to come into. So the market is daring you to enter at the nosebleed resistance areas, saying, take a chance, take a chance, take a chance. But you haven't had a pullback. You need a real good pullback like you did back here so that you can be let in the door. That's what you look for. So you had that here. You had your rally alerts back here. So if you missed this, you're now waiting for the next pullback to get in. And sometimes they'll go for a long time without giving it to you. Like if you missed this rally alert back here, you didn't get another pullback until here. All right. So yeah, it can be daunting. You could have taken a leap at any one of these days here, or even one of the days here. You could have took the chance, and the market rewarded you by continuing to head higher. The only thing is you just don't know how much higher the market is willing or ready to go. That's the only part. That's the only part that you don't know. All right. Like back here, when you were in a bear market, you had bear market rallies along the way. They weren't too strong. Some of them are pretty much nil. And then the bears just came back in and just took control. But here, this is a stronger, more sophisticated, more established trend, this bull run. And this one doesn't want to pull back. So it's bucking the trend of the other indices. There's a stark contrast between the Dow and the NASDAQ. Then when you look at gold futures has a bearish trend momentum reading. The market was in a correction, and then it stopped, and now you have the bullish algo shifts, which are now nullifying the bearish trend momentum reading. So the market is now bouncing back higher. 2400 is a key technical support, key technical resistance and a psychological resistance at that. So this is going to be interesting to see if gold can climb that wall of worry and get back trending bullish again. So far, you can make the argument that the bulls for now have wrestled back control of the gold market and are ready to see the market run. Next, we have the E-mini S&P 500 futures, and it's a sideways congested area, but you do have the bearish trend momentum reading, which means that we're expecting the market to head lower. All right, there's nothing to offset it. Yes, the trend is long-term bullish, but the trend momentum reading has fallen off, so we're expecting price action to head lower. All right, unless we get a bullish algo shift or a rally alert, this market is marked for death. It's marked to go lower. All right, we are anticipating the market to head lower. All right, lower, lower, lower. Next, we have crude oil. So crude oil has found a little short-term bottom support here with a rally alert coming into the trading session. The market gave you a nice upsurge today and stopped right at the bottom of the Kumo cloud resistance. So the trend, which is a bull market, has reclaimed the price action, and we have a bullish trend momentum reading. So even though you're at a resistance point, you still have the bias now back to the long side of the market for now. So you got to take what you see, trade what you see, not what you think at this point, right? That's what we do. So we'll see how this pans out. Next, we have the euro. So the euro has crossed over back into the bear market territory. And we had the bullish trend momentum reading, which gave you a bear market rally. You got north now of the Kumo cloud. And we are expecting the market to continue to run. The bearish trend momentum reading, you're in a locked-in bull market, but you're in a bull market. So you're in a locked-in bear market, but you're having a bear market rally. And it has now become official because you're above the Kumo cloud. All right, so this rally is starting to strengthen itself. But you still got to remember, you're still in the bear market. And once the bear market goes back to sell the rally mode, it's going to make up for these past negative bot checks. They're going to kick in, and they're going to kick in something fierce. All right. But until then, the nod goes to the bulls. This crash alert nullified. The negative bot checks nullified because of the bullish trend momentum reading. So you're expecting the price action to continue to grind higher. And then once it stops, then that's it, like it did back here. And then the price action just collapsed. So you're expecting that you bounce technically, and then the price action collapsed again. So you're expecting that to wash, rinse, and repeat. Next, we have the pound sterling. Just like the euro, we got the bullish trend momentum reading. The market is, defying the bearish trend momentum reading, which has been nullified because of the bullish algo shift. So you had also these negative bot checks, even crash alerts, all nullified and ignored because of the bullish algo shifts. So you have a bear market rally. I'm sorry, well, actually, it's a bull market, but it got locked back in again, and now it's official because it's back above the Kumo cloud. So you got the bull market long-term trend, right? And then you've had some conflicting bearishness with big rallies being sold. And when you start seeing weirdness on the chart, like it's obvious, you see here it's selling, you see here it's buying, right? And then you see here it's selling again, now it's buying again. But look along the way. When the market had the bullish momentum in it, right? The bullish algo shifts. Look at all these negative bot checks you got along the way. And they were all ignored and nullified. Ignored and nullified, right? Until the bullish algo shift turned. Then all of these prior bot checks that were ignored, boom, there you go. Right? Now it's starting up all over again. So you have a longer term consolidation that has lasted now going into almost a year. So you've had a year of going nowhere. If you bought on this day right here, August the 3rd of 2023, and went away and came back, now here we are. It's the same price it was when you left. Or if you went into a coma on this day when you bought, and then you woke up today, the price is the same price it was the day you bought it, as if nothing ever happened. And we've had a lot to happen, but at the end of the day, nothing has happened. Interesting how that happens, right? Next, we have the Aussie. Now, the Aussie has really been fighting a battle. It has been trying to get itself together. It really hasn't been impacted by gold like you would have thought that it would. It just hasn't been happening for it. It's been struggling. You had the bullish undertones from the end of October of 23 to now May of 24, but even that hasn't been able to really wrestle control of the market. It looked like it was going to do it. I mean, you had this powerful bear market rally, and then it just collapsed utterly, drifted sideways, tried to pop, but then would quickly drop. Every rally being sold as on cue, gold not being able to help it, not one bit. And then you finally got your rally alert, and then you finally got your break. But then look what's happening now. You've come right back down into alignment. So this market has really been struggling big time. And when you look back at all the conflicting price action, in a sense, it's been a nullified market. Again, the price from August is the same price it is now. Price action really hasn't changed. You're still right here. So it's just a very wide trading range, a very wide consolidation pattern. The market's not like just, trending in any one particular direction. Look at this sloppiness here, just chopped around, but it had the bearish undertones to it. Even though you would push and rally 100 pips, you'd only fall right back down again. So the nod was always to the bears in this situation. And now you had the bullish algo shift, and now it's ended, it's topped out, and now the market's starting to drift lower again and starting to correct back down. So it's a wide sideways pattern for now with no clear direction in sight. Yes, you are north of the Kumo cloud yet again, like you were back here, but it seems to not last. 67 seems to be a problem. When it was above 67, it couldn't stay there. It didn't stay there at all. Like what, 2 weeks, 3 weeks, maybe a month, and then it just couldn't do it. It spent most of its time below 67. 67 seems to be a key resistance area, and that's where we are right now. Okay, very interesting things happening when you take the longer term view. Now, the Russell My Hustle also having problems. It struggles above 2100. 2100 seems to be a big problem. Every time it comes up here at 2100, it can't hold. All right. It can pop it, but it can't hold it. All right. And every time it gets up there, it comes right back down with a vengeance. So what do we have going on here? Well, you still have a bull market, right? But you have the bearish trend momentum reading, which means that the market is in a corrective state. So the price action is dropping as we would anticipate for it to do. You're getting close to the bottom, to the top of the Kumo cloud support. And this is also a short-term support right at the Kumo cloud support line. So that is a solidified strengthening of a support, which means that it will be harder to break. But if it does break, you got another support right here at the bottom of the Kumo cloud, support at 2042. So at 2042, you have another support line. All right, that's where you are. And then you have another one at 2008. So from 242 to 208, that's your little air pocket of support. And if that doesn't hold, then you come all the way down here. All right, you're coming all the way down to here. And then you're going to come all the way down to here. All right. So 2K is a psychological support, which corresponds to the bottom of the Kumo cloud. And that is what you have going on now. If that doesn't hold, and then the market drops back below 2K, then you have a very precipitous drop coming your way. Right here is a key support, your last key support, until you come down here to the 52-week lows. So right now, you could make the argument that the Russell is threatening at this point to retest the 52-week lows. All right. You are in a broader consolidated place up here at 2100 is a key resistance zone. So you can make that argument, but you are starting to head back down too. So it's going to be interesting to see who wins out. Right now, though, the nod and the control and the bias is to the bears. So we're expecting more downside in your Russell and in your Dow. But the NASDAQ is the opposite. Now, here in the Ethereum futures, you're back to the locked-in bull market. You got a bullish trend momentum reading, and the price action is above the Kumo cloud and locked in. So I'm expecting that Ethereum will continue to push here. Locked-in bull market. Next, we have the Bitcoin futures, locked-in bull market again. We have the bullish trend momentum reading, right? But then that dropped off, and now you have the bearish trend momentum reading, but it's been nullified. So a short-term support bottom has been put in, corresponding with the top of the Kumo cloud, and you have the bullish algo shift now. So now the trend has reclaimed the price action and is attempting to push the price action back higher. So the 52-week high is in play, all right? This bearish trend momentum reading will more than likely fall off if the market continues to rally, okay? Now, if it fails like it did back here, then you're going to come down and take out the prior support like it did here, but then it did something funky by exploding right after that. All right, it explodes, then it collapses back into the pocket, then explodes again. So getting very volatile up here at this, 70K level. 70K seems to be a key trouble zone of resistance for the Bitcoin future. 70K, the psychological resistance zone, is a very tough resistance area for the market to crack and stay above and close above. Very difficult. So we'll see where this goes. But for right now, you got the bullish algo shift. So I'm expecting the price action to continue to grind higher. Last but not least is the US dollar index. So you still have the locked in bull market, bullish trend momentum reading, but this has been nullified because of the bearish algo shift. So the price action has continuing to grind lower and is in a state of correction still. And so we expect the price action to continue to decline as long as the bearish algo shift is active. Once that drops off, then the market can be free to start trending higher again. But until then, you are in bear mode, you're in sell mode. So the dollar is being sold here, just like it did back here, which means it could start to accelerate and get severe to the downside like it did back here. That's what people are concerned about right now. The dollar bulls are concerned because if that happens, then it is going to cause the euro and the pound sterling to explode higher. All right, so just something to think about as we're moving ahead. We don't trade what we think, we trade what we see. And right now, the dollar is being sold. So that means that The euro is being bought. All right, ladies and gentlemen, that is all that we have. I know we had a lot of charts to go over, but we needed to because we had a holiday weekend, and markets tend to consolidate and act kind of weird when the holidays on a Monday. So Monday's price action may or may not be real, meaning that tomorrow could be the real direction based on how tomorrow's market closes. That could be what the real direction is. So we'll see. We'll look at how the market moved today and compare that and see what happens in the overnight. The reports are out, so you can log into your dashboard and you should be able to see the attack reports. And you're going to want to go ahead and get your trades on before the markets, the overnight markets, start to move. There's not a lot of rally alerts in there, and that's because of the holiday weekend. The only rally alert we have is on the crude oil futures. That's been something I've been looking at. That one looks like it may try to rally here. I think this is getting a bump because of what's happening, with the war and rumors of war overseas. It should also be noted that, the crude oil was in a state of correction on the algo chart, and it still is, but it looks like it may have bottomed out now and may be ready to bounce technically from this, and vacate the 70s area altogether and get back up toward 85 plus. As far as the US dollar index, like I said, that one looks weak. But I'm believing that the market may move sideways for a day or two based on what I'm seeing right now. I don't think it's going to do much. Then we have the Russell. I think the Russell will probably try to play around here and drift around too. But it does have a negative bias. Gold right now has a bullish bias to it, and I'm expecting gold to try to break out here. We're in the August futures contract now, so this one does look like it wants to take a stab at the 52-week highs. So that's not quite $100 away. We'll say it's more like $70 or $80 away that it needs to move, and it can do that with the snap of a finger. As far as silver is concerned, looking at silver is poised to break out also and run. I noticed that one pick up as well. So it looks like the pullback that it had is over and solidified, and now it wants to make a run as well and put in a new 52-week high. So both gold and silver look interesting here and could possibly run. So watching those two for sure. Oil, gold, silver, oil, like it wants to run. The Ethereum futures are also looking like they may want to run. As far as the S&P and the Dow, like I said, they look weak at the moment, but they probably will just drift around and consolidate at the current price levels. And of course, looking at the Bitcoin, I don't think that one is quite ready to run. You could say we oversold a little bit today, but I think that one could be gearing up to move higher as well. It's just something to look at. It's something to think about as you're moving into the overnight markets. All right, folks, you know what it is. The system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And on that note, I'm out. Peace.